Okay guys, two questions to do in this episode. Now what are they? If you want to sell for $1 billion or more, as you say, why will someone pay that? And secondly, do you want to IPO? Now if you want to know the answer to this, stick with me right now.
Ask Alex. Ask Alex. Because you don't know what you don't know. And if you don't know, now you know.
Yeah.
Okay, let's deal with the first question now. So question, pitching a VC and the VC says, if you want to sell for $1 billion or more, as you say, why will someone pay that? Now, so what do they mean? You told them you want to sell for $1 billion, didn't you? You did, didn't you? Oh, okay. You better have a good answer. $1 billion with a B is a lot. You may read about the 50 or so unicorns, but they're still freaking rare. That's why they're called unicorns. Now, of course, investors are unicorn hunting, but they also have some inkling as to how really hard it is to build a company that large. So many things just need to go right. The bigger you are, the fewer potential buyers there are. So to be acquired, you will likely have to be a strategic purchase. Like, as I keep mentioning before, Instagram, WhatsApp, or for Facebook, etc. Now, what core problem and trend are you a part of selling into? Now, if you're making big money, then an IPO may be a real opportunity for you. You don't need to be a strategic acquisition. You just need to have interesting financials. Your answer can be that you would get bought, most likely for a strategic reason, but the public markets would pay for a great company. Whilst IPOs are rare, they still are an opportunity. The most critical determinant of unicorn possibility, if I just make up a coin of phrase, what does it say? Unicorn possibility is by targeting a really large market. Now, I keep saying this because it is really important. You need to get that across to investors. So, how would you answer this? What do you need to say? Okay, Jim. Well, since we're a SaaS, I presume you use Best comps for the public markets, right? Oh, you haven't seen it? Okay. I'll send you a link for it. We aren't investors, so unfortunately, we don't get access to the private transaction numbers, like I presume you do. Private comps are, well, very rarely shared. Public markets are trading around 5 presently with with a liquidity discount of about what 1.3-30% according to SaaS Capital. A general private startup is trading at 3.5x, which is sort of lower on the cycle. Now that always depends, right? We use the 50Folds valuation calculator, which I'm making. I haven't got it finished yet. I haven't quite figured it out anyway. And given our growth rates, payback, and market size, we're currently valued at 7x, mainly due to our growth rate. So as a private company, we would need to be making about 130 million to get our $1 billion valuation. However, being acquired is not the only option. We can be a public company by going IPO. In the public markets, we believe our multiple would be about 10x again, due to obviously growth. Growth is the thing that juices your multiples the most, right? On that basis, our revenue would have to be 100 million. So fortunately, the SaaS market for mobile is incredibly large, pegged by Forrester to be about 76 billion. There's enough for us to take a small slice and still be respectively huge. Now, on a bottom-up basis, we would need to get 1,000 clients at an average ARPU, average revenue per user, of $100,000. Now, dealing with the strategic side, mobile matters. The big guys like Facebook still don't have the strategy and product right. We are experts at mobile. John founded Instagram and Mary was head of mobile at Google. We have our strategy to stick to, and if our thesis is right, there are 7 companies who will fight for us as they are very few other buyers. You get a big price with scarcity and a bidding situation. Either way, I am confident we have a snowball's hell in chance of getting there if we execute right. Is that clear? Okay, guys, well, drop mic. Next question. Do you want to IPO? Do you? Okay, what does an investor mean when they ask you this? Okay, so IPOs used to be all the rage in the 2000s, all right? Path to easy money. That got old fast. Now, in the past decade, IPOs have lost a lot of interest from the perspective of founders. Companies are staying private, a whole lot longer. For various reasons, we're not going to get into it, okay? Anyway, but that's all academic. IPOs are a way for founders and investors to cash out. The thing is, running a public company is a massive pain in your backside. I mean, truly. You think it's all fame and awesomeness? It's not. You have quarterly reporting, you need to have CFO write annual reports, big audits, more cost overhead, the list goes on. When an investor asks this, they're testing to see if you actually understand what an IPO is and means, and how open you are to exit options. IPOs suck, as I said before, but they're another means for investors to get their moolah back, right? Plus some. Your answer should be always, we're open to it, never know. Don't be closed to exit opportunities, right? Investors want optionality. So if you want to say no, don't. Say an IPO does come with challenges, costs as well as distractions, but you'll be open to evaluating your options should the opportunity arise. Okay, so how would you answer this question? Your turn, just checking, okay? IPOs has its advantages and considerations. We see great opportunity in using shares as acquisition currency to build out our product offering. We are worried, of course, that quarter reporting could impact our long-term flexibility to be more innovative. We've seen the inability of Grubhub to adapt to new entrants. We don't want that to be us. Now, having said that, Google has handled it really well with the dual class share structure with super voting rights. But all in all, when the time is right, it might make sense. Let's build an amazing product first. I'm sure I'd more than value and I'd welcome your counsel if you choose to invest and I'd take your money when the time arises. We've got a couple years to get there yet first. Okay, guys, end of that episode or installment. Okay, 2 questions done, ticked off the box. Hopefully you learned something. If you did, share it with your friends. Thanks, guys. Bye.